when they told you that this was easy to be a trader, they probably didn't tell you the truth, because it's probably one of the hardest things you'll ever do to make your living as a trader and to try to go into the market against the world's greatest minds every day and walk away with some of their money. Now, I know that tonight's presentation, we chose one that I thought was very important from the standpoint, I asked myself a lot of times, why do we end up succeeding when other people failed? And when you become a trader and you become an investor, you're always trying to put the odds in your favor, and that requires discipline. And then in this new age of put a mouse in your hand and click, it makes it easy to get into the market. Sometimes too easy, and you end up over trading, or you end up doing things that you wish that you never did with that mouse in your hand. So let's get started, and I want to thank Adam Yabedra for working with David and MetaStock to get this put on tonight. And I'm excited to be here. So let's go with the presentation. Risk disclaimer. Most presentations, like David says, have the risk disclaimer in there. I'll let everybody read this. Basically, what it means is when you enter the waters of investing, you got to be a big boy or a big girl. You take the risk, and you are accountable for that risk. Now, I like to ask everybody where they're from before I get started. Tell me, if you will, where you're from and what city, and if you will, what you like trading. There's somebody from Panama. Canada? Boston. Hey, Brian, is it real cold up in Boston? Montreal, Canada? Chicago? Oh, futures traders. Good, good. Australia. A lot of people from Australia tie into the American markets either late or early, and we see a lot of people from Australia. Malaysia. All right, have you ever heard this, that over 90% of people lose money in the markets? Have you ever heard that most people get an account and blow it up? Well, sometimes, if you think about that, you have to ask, and you see the title of our presentations tonight is Be Different, Trade to Win. Let's talk about your goals. Here we are, it's November the 9th, or actually November the 10th. How many do you feel or could say that you're hitting your goals that you laid out for yourself in 2011? How many of you are accomplishing your goals? I think it's very important that you, before you put money at risk, you really lay out a plan. And laying out that plan, you got to say what is realistic based on your resources and based on the time, which I think is really one of the valuable things that you have that you can give the market. When you ask yourself about the 90%, definitely you don't want to be in that 90%. You want to do things differently, and you want to have a edge. Some people call it a contrarian view, but a view that is different than most people. I think most traders that I've met focus their energy on a couple areas. They focus on charts, And I know when I first started, I used to spend a lot of time staring at charts. How many of you spend a lot of time looking at charts and thinking you see patterns and things that are going to make you money, and then all of a sudden the chart gets active and you put your trade on based on your study, and then as soon as you put the trade on, it goes haywire and you lose money? I think most traders focus on charts. Even fundamentals, there's a lot of people that will read every report put out by companies, and they don't understand when that company, even though they're making tremendous amounts of profit, their stock's going down, the fundamentals. And in recent years, technical analysis has been a real focus. How many call themselves on here technicians? When you use studies, use a lot of studies in your decision-making process. Uh, use charts and studies. Use fundamentals. Use all that stuff, but you still don't have the trading edge. I heard a presentation the other day, and it was interesting. It was a great presentation, and it was interesting. It was on technical analysis, and it was using a couple indicators. And I thought, this is when I heard that, I said, no wonder so many people lose money, because I used to do the same thing. Because you can look at a chart and you can look at a technical study and you can convince yourself that you got it, and this is a great study to have, and it's going to get you on the right side of the market. And sure enough, as soon as you get into the market following that study, you end up getting run over by a truck. I know it's happened to me, and it happens all the time, and that's why so many people lose money. So you got to be different. Let's be a little different tonight, and let's think a little different on our approach to making money in the market. Let's be open-minded, and let's think to ourselves, wait a second, maybe there might be some other things that we can do to improve our odds. Now, our company, DTI, Diversified Trading Institute, teaches traders how to use time of day, key numbers, the 24-hour market, and by the way, there's 4 distinct markets in the world. There's the Asian market, there's the European market, and this one here gets people sometime when I say there's 2 U.S. markets. There's the East Coast, West Coast. And the reason that there's an East Coast and West Coast market is because of time. I want you to think about this from a common sense standpoint. If I look at New York City, do I have anybody from New York here? If you look at New York City and you say to yourself, you're on Eastern time. So 9 o'clock in New York City, 9 o'clock a.m. in the morning in New York City, what time is it in California? Now, do you think the person that's just like you in California is at the same stage of the morning that you are when you're at 9 o'clock in New York City? Or maybe when you're going to lunch in New York City? What about that person in California? I want you to start thinking from a common sense standpoint. And as you go across the world, and like tonight, we're in Asia, and the market is setting up for tomorrow. Tomorrow's market started tonight, started in Asia. And there's 2 markets in Asia that are pretty important to setting the initial trend. One of them is the Nikkei, the Japanese market, and the other one is the Hong Kong market. They open about 2 hours apart, and if you watch those markets, our markets react, and they're reacting in the evening. And I think you've seen shows that will show you that the S&P 500 is up or down, and you're going, what's going on? Especially when you own stocks. Now, In 1991, I revisited a book that made me do a lot of thinking. And it was written about a man called Jesse Livermore. Has anybody ever heard that name before, Jesse Livermore? Okay. He was the first tape reader. And he didn't have charts. He didn't pay attention to fundamentals. He paid attention to the tape. And the tape is price, volume, and the movement according to time. And because of that, it woke me up. And since 1992, I would say that I'm a very skilled tape reader when I look at the market. And I'll talk a little bit more about that as we get into the presentation. Let's talk about the 5 steps to become a DTI trader. And the definition for me of a DTI trader is a trader that goes around and looks for low-hanging fruit. In other words, whether it's a stock, an option, or a future, we look for the best odds before we put our money at risk. And to do that, you have to have knowledge about the 24-hour clock, you have to have key numbers, and you got to understand how one market affects another market. The 24-hour clock starts at 3:30 p.m. That's Central Time, 3:30 p.m. Asia runs to 3:30 a.m. There's a picture of it right there. Then you move into Europe from 3:30 a.m. to 8:30 a.m. This is where you have 4 markets in Europe that you watch, and one is the DAX. Is there anybody on here that trades the DAX? The FTSE, the CAC, and the Swiss. These markets set the table for the U.S. market, and they do it every morning. Then at 8:30 to 12:30, you have the morning market, the East Coast market. This is where New York has a big influence, and this is where the volume is. And then you make that transition, I call it lunchtime in America, from 11 to 1. And then, of course, you finish up the afternoon in California. I know I used to do a lot of work with people, and they would tell me they made money in the morning and lost money in the afternoon. Well, the reason, and they couldn't be consistent, is because they wasn't thinking about the 24-hour clock. These central times are very important when you're thinking about the market and thinking about trading, whether it's futures, whether it's stocks, or whether it's options. Let's talk about charts. There's an effective way to use charts. I will tell you that the time frame I use on charts is the 30-minute. Let me give you a little background on that. Has anybody here ever been to the New York Stock Exchange floor or the Chicago floor? Has anybody ever been down there to the floor itself? Okay. On the floor, they have a checkout period. It's called the 30-minute checkout. And if you watch this, all the orders that are processed get checked out every 30 minutes. Therefore, they're on a 30-minute cycle. So what I found is if you'll use a 30-minute chart, you get the real trends. And then when you tie that in to time, you can really refine it. And we'll talk a little bit about that. But the question you're trying to answer is whether to be long, whether to be short, or whether you want to be out. And there's a lot of factors that go into that decision, but what we've constructed is a process to get the answer. I want you to think about this from a bigger picture. If I said to you, should you have been long stocks since October, what would your answer be? Yes or no? If I said to you, should you be long stocks in November, your answer might be varied because you've sort of been in the noise area for the first 9 days of November. But the bottom line is, if you dropped it down to the micro, you probably had some trades long and short in the month of November. The only thing that I've ever found that was constant was time. Let's talk about that. 8:30 in the morning, 8:30 Central Time in the morning is when the New York Stock Exchange opens stocks for trading. Now you have the pre-market, but I'm talking about in general, you have the start of the day. That time sort of sets the table for New York. Tells you who's going to win, who's going to lose by those opening prices. If you go and look at the week starts on Sunday night at 5 when Asia kicks it off. If you look at the month, you look at a calendar and you see when was the first day of November, when was the first day of October, and that kicks off that month's worth of trading. And to keep the odds in your favor, you want to use the opening price. There's 4 elements of a chart, and the elements are open, high, low, and close. I contend that if you use the opening price as your guideline, you instantly have the pivot for when you're looking at the market, and you have a way to determine who's winning and who's losing. And we'll get into that too. Now, you've heard the term pivot, which is the dividing line from bulls to bears. You've heard the term noise, and noise is movement in a stock, in a future, or in an option that it's not really trending. It's just what we call chop, and this is where people lose a lot of money not being able to recognize the noise of the market. And then, of course, you got support and you got resistance. Tonight, I will give you the big time support numbers, the big time pivot number, and the big time resistance number for the remainder of the year. And I will show you how important it is to know those numbers, not in the history of what's happening, but in what's going to happen going forward. In 2011, in November and December, here are the 3 numbers that will make you money. This is the S&P 500 Futures. 1256 is the pivot, 1120 is the support level, and 1376 is the resistance. What does that mean? That means right here in November, when the S&P is trading at 1238, we're in the noise zone around the pivot area. We're waiting for a break up or a breakdown, either heading towards the 1376 or heading towards the 1120. Now, how can you tell that event's occurring? When it moves outside the noise zone. As a rule of thumb, it's approximately 30 points. So you add 30 to the pivot and subtract 30 from the pivot, and you have a general noise area for the current market. That would take you down to 1226 or up to 1286. If you see this market get above 1286 towards the end of the November, then you're going to see a flush to higher levels. Watch those numbers and watch it unfold as we get into the end of November and the start of December. Any questions about that before I go to the next point? Any questions about that? Okay. Brian asked me where I got those numbers. Absolutely, Brian. The 1256 came from January 3rd of 2011. January 3rd of 2011. The 1120 came from the October of 2011 opening. The 1376 came from the average range that you can expect based on the amount of time left statistically, if we do go up, should lead to 1376. Okay, let's look at IBM. Everybody's familiar with IBM. Let's talk about IBM. IBM opened the year at 147. The month was at 181. 181. This week it opened at 186. If you go look at the most significant date on IBM, the last most significant date on IBM was the earnings announcement, and IBM was trading, I think, 185 if I remember. 185. Now, the earnings were disappointing. You remember what happened to IBM on that day? It sold off. But now look at it. It's back above the monthly open, and it's getting ready to go higher. And when you see the S&P start going above its pivot area, above its noise zone, IBM will be going higher. This is how you answer the question, long, short, or out. Now, to do this, we created some tools that allow you to see a picture. And we call these the roadmap indicators. Let's look at some of those. This is a pivot chart of IBM. Everybody see that? Pretty solid uptrend. Takes out this pivot number that was created right here, and you got a breakaway to higher prices for the end of the year. That's as clear as I can make it. And if you go look there and you look at these numbers, you'll see that that number, let me find it here, coincides with that about 188.5. Now here's a stock box. This is a visual a visual look at noise right here. This is all noise. And then the buy area. And then the upward movement that comes after. Noise, buy area, sell area. Pretty simple when it's put in context with noise, pivot, support, and resistance. Now this is something that we invented over 11 years ago. It's called the ETR line. The ETR line gives you a short-term look at the current trend. And you can see right here we're following some key indicators, E-mini, the Dow, the NASDAQ, the DAX, the Russell, the Euro stocks, the advanced decline line for New York Stock Exchange, the advanced decline line for the NASDAQ stock, and then these are net numbers, net, positive minus negative equal to net, and then you see the tick. Now, let's look at this. This was on Thursday, November the 10th, 2011. Everybody see that? Let's make some interpretations based on what today's data says about tomorrow. Does everybody see how the issue started increasing towards the close? This is a bullish signal right here. This is a bullish signal, and then you see the price action start going higher. So what I'd be looking for tomorrow, if this S&P gets above about 1245, then you're going to see a run in the S&P. That's what I'd look for tomorrow. And that's a short-term look at what's happening right now. We're going from the big picture to the small picture. A research key. Sometimes, if you've got a stock and you need to know a little information about the stock, we can go in there, type the symbol in, and it can go back 1 month, 1 year, 5 years, 10 years, and we're able to do that to give us a perspective to keep everything in context. See that down move there after earnings? Now it's coming back up and getting ready to go up again. All right, let's pick out about 5 stocks. Apple, everybody's familiar with Apple. Ryder, Cat, Dollar General, and Amazon. And let me ask you just a general question here. Who uses Amazon to buy their books? You know, Amazon is more than the world's largest bookstore. It's an e-commerce company, and this is one of my favorite stocks to look at going in the last quarter. Apple's got a history of high performance in the last quarter. This year it's going to be interesting to watch with Steve Jobs not around anymore. Ryder is a transportation stock. Cat, and then Dollar General. Put these stocks on your watch list. These are the stocks that I have on mine, and at the proper time, S&P starts moving higher, these stocks will move higher with it. Now, the following charts are provided by MetaStock. Now look at this. There's Amazon. See how Amazon opened the year at 181? And Amazon today, I think, probably about 210 today. Opened the month at 208. It's trying to go higher, but it's meeting resistance until it gets above this 220 area, and you can find that on the chart. You will see you will see Amazon, chop around. But once it gets above 220, S&P gets up, then you got to play. And that's where the patience comes in. There's Caterpillar. Look at it. There's 2 stocks we've looked at so far. They're both ahead of where they were when they started the year. We're both in the 11th month of the year, and we're starting to see the start of an upward movement. And what's so beautiful about this is that you're pretty much at ground zero right now. If you start recognizing this, put it on your watch list, you'll be ready to play these stocks as the market heats. Dollar General. Look at that one. Again, above the yearly open, right around the monthly open. As we move out of the chop zone, we'll go a lot higher. Look at Ryder. Same thing. These 5 stocks would be the stocks that I would own if the market takes out that 1285, 1286 on the S&P. So what I'm waiting for, and part of my plan and part of my entry, is waiting for the S&P to go there, and that gives me the all go signal as we go into the last 40 days of the month. And we know some things about the last 40 days, and I'm going to tell you a little bit about them through some insights. You have to be different to trade to win. Notice that I'm not looking at relative strength. I'm not looking at MACD. I'm looking at the tape of the stocks to decide whether to buy. I'm looking at how those stocks react to the movement of the S&P, and I'm tying the futures to the stocks to trading. I have 3 books out there. The first one's called Winning the Day Trading Game. The second one is called The Markets Never Sleep, and the third one's called Trade to Win. So I know this is a lot to take in when you've been studying charts, you've been studying fundamentals, you've been studying technical indicators. It's a lot to take in. And these books, the first one sort of tells you how I discovered this and how it works. The second one talks about the 24-hour clock, and the third one is about the attitude and application of what I'm talking about tonight. Now, when we work with a student, the first thing I need to know is what your goals are. When I plan and when I do things, I trade a lot better than, let my mouth run crazy. And good planning allows you to become consistent. I.e., I've got 5 stocks identified. These are stocks on my watch list. I'll plug it into my ETR, okay? And then I will sharpen my approach as I reach those price points telling me I have the go-ahead. A fact that's not discussed a lot, but 75% of all stocks move with the S&P 500. So doesn't it make sense to simplify this and get stocks that move with the S&P 500 and watch that index for signals and then go to the stocks? It did to me years ago. And this will allow you to reach your goals of making money in the market. Now, I know a lot of you are great at constructively evaluating others, but have difficulty when you evaluate yourself. I want you to think about something. How many hours have you put in coming up with your plan using the wrong thing to plan with, i.e., a lot of different approaches other than the tape reading that I've talked about tonight. I used to tell people, I had this discussion with a student. I think it was sort of funny. I talked to him on the first week. He said, Tom, I like what you said. Of course, I'm a technician. I need to tell you that up front because I've spent a lot of time studying all the ins and outs of relative strength, Bollinger Bands, MACD. And by the way, I throw a little astronomy in too because I like to know when the moon's full. I said, well, that's okay. How you been doing? He said, I've been losing money. And I said, well, how many hours have you been putting in? He said, oh, somewhere between 30, 40, 50 hours a week. And I said, you won't be open-minded until you decide for yourself you're tired of working for free. About 2 weeks later, he decided he was tired of working for free. And he learned what I was telling him. Now, let me tell you why I need the roadmap profile if you're serious about being a trader. It takes less than 10 minutes for you to fill out. It will give you a snapshot of your goals. It'll zero in on what your goals are. It'll show you where you are and where you want to be as a trader. It will help identify what you think your strengths are and your weaknesses. And then we'll work on the weaknesses. And by getting an objective point of view through our evaluation process, then we build that plan to help you reach your goals. That's how it works. And that's the example of some of the strengths that we'll ask you about. How psychology plays a part in your success. What are your short-term goals and long-term goals? Right now, I'm thinking my short-term goals with November and December in front of us is take advantage of one of the best times of year to trade. Takes a while to be a good trader. You got to work at it. But this profile will let you really think about some of the things that you probably are not thinking about when you're getting up in the morning and looking at a stock going up and down. What time are you the most productive? That's important too. I already told you my most productive time is from early in the morning to about 10:30. Okay, that's when I'm the best focused and I can trade the best. Okay, you got to figure that out for yourself. You got to figure out what your accuracy rate is, what kind of risk that you can absorb in your trading. All this becomes invaluable to you when you're trying to play the odds. The spider chart here will be identified for you and tell you exactly where you're at and what you need to learn. You know, it's not an accident to be successful in the market. You got to work at it. And tonight, if you like what I said, you're interested in taking this a step further, you can obviously fill that out, okay, and get involved. Now, for you showing up tonight, I like to sort of put my money where my mouth is, and I tell people that unless somebody will trade live in front of you, or unless you see that live trading in action, I said I wouldn't put my money in it. So what I'm asking you to do is fill that out. You get a free 3-day trial and watch our 24-hour trade room analyze the market. Pretty simple, isn't it? Now, I told you I'd give you some insights about this month. How many people have ever traded the day after Thanksgiving? I want you to answer that question because that to me is one of the biggest insights I can give you in the near term. How many days is it to the day after Thanksgiving? It's called Black Friday at the retail store. How many days do we have left until that day? Let me look at a calendar here. It's November the 25th. Now, we will host a webinar on that day. If you're interested, you can come there. But I spent years knowing this fact and not being able to make money. And then I started hosting a webinar on that day after Thanksgiving. And the reason I wanted to do it is I wanted to show people how to make the data work for you. But go check this out. It's the most bullish day in the last 50 years is the day after Thanksgiving. And a lot of people are not even around to take advantage of it. We have a lot of fun on that day. All right, let me answer any questions anybody has. What I'd like you to leave with tonight is the following. If what you're doing now, spending a lot of time, a lot of effort, studying the wrong stuff, then change it. Number two, there's some good books out there that will give you some overview of what's happening. Here's one that I'd tell you to get. It's called The World's Greatest Stock Trader by Richard Smitten. It's really a powerful book. You ought to read that book, The World's Greatest Stock Trader. If you have emotional psychology type issues in your trading, there's a good book called The 12 Habitudes for Success by Ruth Barons Roosevelt. You can find that at Traders Press. It's a good little book. And I would keep that in my library, and I'd refer to it anytime that I let my emotions get in the way. Now, is this pass good for night trading? Yes. We're open right now at 9 o'clock tonight. We'll have a session to prepare for tomorrow, and we'll have people trading tonight in the trade room. Folks, I got to tell you, this has been fun doing this tonight. I hope you've enjoyed what what I talked about. I tried not to just make it so complicated, but I'm trying to enlist you in the art of tape reading. And you saw IBM and how it's simplified when you think in terms of where did it open at, where is it currently trading, looking at your portfolio statement. Are you making money with what you have in there? If you're not, you probably ought to get rid of it. General rules like that. I like to think a lot of common sense goes in this, and I think if you'll use some common sense with the technology we have today, you too can get over and get outside of being one of those losing traders. Because let me tell you, and this is something you got to keep in mind. The 24-hour market gives you an edge. Learning to trade the DAX gives you an edge. Learning to integrate futures with stocks gives you an edge. I want to thank David for inviting me here tonight. Thank you so much for giving me the time to talk. And let me see. I see some stuff in here. It's pretty small. I probably should have figured out how to make the font. Here, D. Braun says, Tom will teach you how. Let me see how to use. He's one of the best. It must be. Oh, hey, Dave. Didn't recognize you. Pretty good. Oh, the books. Adam, type in The World's Greatest Stock Trader by Richard Smitten. Habitudes. Successful Habitudes by Ruth Baron Roosevelt. And then my 3 books, some people say they're pretty good. Let me go back to that page. You can get it at Amazon, or you can send us an email and we'll ship them to you. Click here to get your copy now. Yeah, okay. We selling also. I can promise you, I'd rather you buy them from Amazon, but I do sign mine if you want it signed. And don't forget the World's Greatest Stock Trader. Yeah, let me give you the times the times, because that wasn't in one of the slides. Typically in the evening, they'll trade at 7 o'clock p.m. They'll trade at 9 o'clock p.m. They'll trade at 5 a.m. in the morning to 7, 5 a.m. to 7. From 8:30 to 10:30, we call that trade zone 1. They'll trade from 12:30 to 1:15. Trade zone 2, and then 2:30 to the close. Now, if you're going to join and everything, go to bed early tonight and be there in the morning at 5 o'clock. There'll be a good trade at 5 a.m. tomorrow at setup tonight, and there'll be a good trade in the morning at 5 a.m. in the early bird session. I'll be running that one tomorrow morning in the early bird. Folks, I hope you got something out of this. I hope it got you thinking. I really want y'all to do well. Yeah, thanks, Adam, for reminding me. Be there at 10 minutes to 5. That's the deal I've got with all our students. 10 minutes to 5. I hope everybody becomes a successful trader. I hope you stay with it. It's one of the greatest feelings in the world to wake up in the morning or be traveling and trading and being able to go in there. And we have a lot of fun with uneducated traders at DTI, but it's all about the odds. It's about being part of that community and having a lot of fun. That's all she wrote, folks. Hope I didn't bore you. And I hope that you come watch me trade live. That's really where the rubber hits the highway. Kim, if best thing for you to do is get the roadmap profile filled out. We'll get back a hold of you in 48 hours and go through your goals. That's probably the best thing to think about at this stage. Thanks, Dean. All right, Adam. Thanks for setting this up. Great. I like the slide presentation. It was very easy and very it was really good and clear. Thank you. And I think they taped it. I'm not sure. David would come on, I guess, and tell you. It's 5 a.m. Central Time. I'm sorry, Marco. 5 a.m. Central Time. The chapter 6 in my book says time is central. Yeah, Jane, I think it was. Take it away, Adam. Hey, one last thing. If you want to send me a direct email, you can send it to Tom at DTI Trader. Tom at DTI Trader. Type that in there and they can send me an email if you got any specific questions. Thank you so much.